Right, hello and welcome to Camel Finance. I'm your boy Camel, and here is your weekend's video, okay? This one's going to be important. So, today I want to show you a couple of things that are interesting, right? Then we're going to get into some data that we've seen and the data that's to be expected this week. The data this week is absolutely critical to the base case expectation that this channel has had since the lows. And this data today is either going to confirm that we are about to engage in a blow-off top move to all-time highs for all risk assets, or the data could well signal that we're going to get some kind of double top, or that the high is already in for this cycle. So this data is going to be super, super important, and I'm going to build the case up for exactly why that is true. Also going to build this overall theme for anyone that's semi-new here for why we know that all-time highs are most probably coming next. And then I'm going to show you the charts, all my live positions, and we'll do the TA as always. So in the meantime, sit back, relax, hit that like button, and let's get into this. Look, first of all, Bitcoin is doing Bitcoin things, okay? New all-time high. The peso in Argentina is getting absolutely obliterated, as you can see. I also found this, and I thought this was pretty funny. Now, if you're new here, you won't know why, but you're probably already smiling and smirking if you're one of the channel OGs, right? Check this out. The next 12 months is looking like the rally is set to pull back before one final push higher to create a double top, okay? A double top. Why is this funny? Because this melt-up chart, which has been the staple of this channel since all the way back at the lows, right? Back here, I was saying everyone thinks this is coming next, right? 2008 style plunge. Then in here, everyone was screaming bull trap, right? In here, everyone was screaming what? Michael Burry says sell, okay? Absolutely guaranteed fake breakout, right? And then all the way up here, people were saying, no, bull trap, biggest bull trap I've ever seen. In this neighborhood, people were saying, ha, told you so, this is what comes next. And I was saying the whole time that these people are going to keep doing this, right? When we get up here, they're going to be calling for lower highs. And then I said, when we eventually get to the double top level, the all-time high level, they're going to become the double top gang, right? And then we're probably going to get this little pullback at the blast through. We print this all-time high. And then once everyone is in the market and everyone's wrong-footed, that's when we have that bust. So it's pretty comedy, right? That we know the types of tweets we're going to see well ahead of time, months ahead of time. Like I said, if you've been here before, you've seen me do that squiggle on that chart a bunch of times, right? The double top gang is officially here. So surprise, surprise, right? We never would have seen that coming. The data this week, right, for those watching unemployment, saw a drop in the unemployment rate to 3.7%, which falls into the not even close category relative to the 4.3% level needed to trigger a recession. So what does this tell us? It tells us that we're not quite there yet, and there is still space to run the all-time high. In addition, on the 12th, which is Tuesday, we're going to get the CPI print for the US. Now, this is super important for a number of reasons, okay? Again, a quick apology to the channel OGs who have seen me do this a million times, but it is really important, and I want to stress this because, remember, if you're a channel OG, right, you've been here since all of this neighborhood, you've seen all of this unfold in real time, you've been here every step of the way, and if you're new, then you're staring down the barrel of this huge final blow-off top portion of the rally before this deflationary bust. So this is really important, okay? This is really important, whether you've heard me or seen me do this a bunch of times or this is the first time ever. The whole thesis for how this melt-up is going to unfold and why this melt-up is going to unfold is that we are swinging or have swung from a highly inflationary environment to deflation. And now this is an out-of-date depiction, and this is not where we are. We've passed through the Goldilocks zone where we've had the strongest rally. That would be this section right here, right? And now we are somewhere in this neighborhood here where we are about to move into strong deflation. Of course, once CPI continues to go negative and more negative, what we're going to get is a deflationary bust. And that is what this downside arrow is illustrating. Now, if I've started to lose you, stick with me because I'm going to show you why this is the most probable outcome. First of all, at the top in blue is the M2 rate of change, right? This has been falling off a cliff. But the key thing is the US inflation rate, CPI, right, lags the rate of change for M2 by 19 months. So a decline here doesn't manifest in a decline in CPI till 19 months later. Same here, 21 months later. Same here, 18 months later. And the key is at the hard right edge of the screen, this wobble of apparently sticky inflation that most retail are going to get wrong, most traders are going to get wrong, expecting to see a sticky inflation and even further upside ticks in inflation, more hot prints in inflation. Retail and everyone is going to get this wrong because, as you can see from the rate of change of M2, which is in this very, very strong declining period, this has yet to manifest in the CPI. This wobble that we're experiencing now, this pseudo stickiness, is actually to do with this wobble right here, and all of this is yet to manifest as deflation. So going back here, we are indeed still swinging towards strong deflation. We are indeed still looking down the barrel at a deflationary shock, as illustrated by this move right here. Now, if you're still not convinced, there's more evidence here, okay? This is a Chinese CPI that came out today. Take a look at this. China's already in deflation, okay? China has already, its pendulum has already swung past the Goldilocks zone, past this area of CPI coming down, and they are now in the red, okay? China is already here. Like I said, we know, because this data here lags, that this is going to manifest, okay? This portion of the curve has not yet manifested in the CPI print. So the US is likely going to follow China into deflation too. And any print 3.1 or below is going to start to confirm this. The market is going to sniff this out. And to be frank, the market has already sniffed this out, because unless we see a very high, hot CPI print on Tuesday, this is going to be a confirmed pause. Once we get that confirmed pause, we are going to see the market put in this final blow-off top portion of the rally. And I would further speculate that if we are to see any number for CPI on a 2 handle, okay, even if it's 2.9, any sign of a 2, and the market is going to go ballistic. The market is going to go, holy cow, the Fed has actually engineered a soft landing. And it hasn't. Don't get me wrong, okay? Back to this chart. Look, we are going to see this deflationary bust, but the narrative of a soft landing is going to proliferate even more than it already has been. It's going to become consensus, because people are going to say, well, we're approaching that 2% target, right? Like I said, we know, the people that know what they're talking about know that this is yet to manifest, and therefore we are going to see that deflation just like China has. And if we're going to see that deflation, then of course we're going to see this huge blow off top followed by the deflationary bust. So far so good. So long as we don't see a surprise super hot inflation print, then we continue to accept the primary hypothesis, which is that we are well past the midpoint of this inflation to deflation pendulum swing, and that is seen in the charts. That's seen in the charts. How many percentage points are we from all-time highs? We are a mere 4%, okay? We can do that in 2 candles. No problem if the CPI print comes in cold on a 2 handle. Imagine if it's 2.6, 2.7, okay? We're going to be at all-time highs by Friday. So we're almost here. This call has been a very, very hated call. This rally has been the most hated rally I've ever seen in my entire career. I've never seen so many salty bears the entire way up. I've never seen so much doubt in a rally. I've never seen so many people angry at me being bullish and long whilst we're making higher highs and higher lows. I've never, ever, ever experienced that in over a decade of doing this. Max Pain is still to the upside. Like I said, Wednesday's going to be massive. We confirmed the pause, and it's showtime. It's showtime to run the all-time highs. Could there be some volatility and chop on the FOMC date? Yes. Do we maybe see some kind of huge wicks on the Wednesday, and then we need to let the dust settle Thursday before the true direction is found on Friday? Yes, that's pretty typical of FOMC. But mark my words, if we do indeed get a 2 handle for CPI, this is going to be 100% probability. We're going to get that pause, and the market is going to do what we have been waiting for the entire time. Things are already getting pretty violent out here, aren't they? Right? If I zoom in on this candle so you can see, look, where is the pullback? Right? There's all these unfilled gaps, okay? And we just keep blasting off. We're seeing the same thing in Bitcoin. Bitcoin's chart is absolutely relentless. Look at Bitcoin, okay? Absolutely relentless. So the writing is on the wall. It's been on the wall for some time. We're going to get that pause. We're probably going to get that lower CPI print. We're probably going to move towards deflation just like China. And of course, the unfortunate thing is, once we can move towards inflation, once we are in this neighborhood where we start to just move into price discovery, have this blow off top to all-time highs, everyone enters the market, then unfortunately, something is probably going to break. They're probably going to be forced to cut rates. Since they were so aggressive on the rate hikes on the way up, they're probably going to have to be equally as aggressive on the way down. We're going to get this deflationary bust, and almost all of traders and retail and investors are going to get smoked here because nobody even saw this rally coming, right? And then they're going to FOMO in at the top and bang, everyone is going to get destroyed. But unfortunately, that's how markets move, right? They move to harm the most amount of market participants. The last thing I wanted to cover is the credit spreads, okay? Does this look anything like a credit event? Does this look anything like that yet? No. In fact, it continues to make lower and lower highs. At some point, this is going to break out. And when it does, we are probably going to see a credit event. I would speculate that comes sometime around March or April of next year. The reason I say that is because the BTFP program, which is the stealth form of QE, where the Fed prints money and loans it to the banks to prop them up after they sat on those unrealized losses from the bonds, ends at the end of March. Now, there's always a chance they kick the can down the road. There's always a chance they can keep running this pony show hot for many, many months to come. But personally, as far as I can tell, as far as everything I've shown you so far, okay, and this credit spread thing is eventually going to break out. Once all of this comes to fruition, right, once we move into deflation, once we see the credit spreads break out, once we see financially stressed conditions start to appear and a strong deflationary print back to back to back, just like China is starting to see now, then we are, of course, going to get ugly pretty quickly. In the meantime, though, the good news is the market wants all-time highs. This is the most, in theory, violent portion of the rally. This should be up-only mode, and that seems to be what we're getting at the moment. So with all that said, let's get into some charts. So the dollar, I think, is working on a fake breakout. I think this dollar basket is working on a fake breakout. Some chop into CPI, then we get that lower CPI print. The Fed confirms the rate pause, and of course, down we go towards that 3-year cycle low, target in the mid-90s, which has been the target since the top back here. So I think overall, not too surprising. The euro dollar, look, perfect bounce off of support. So long as it can hold this support and continue to rally, because the euro makes up 57% of the Dixie, then the Dixie will come off, right? That all kind of makes sense. Look at the yields, okay? Absolutely wrecked. They followed our squiggle quite nicely. Counter trend bounce before that pause is confirmed, and then down, down, down they go. And of course, if the yields are coming off, is that conducive to a risk-off moment in stock market? Absolutely not, as I'm sure you already know. Look at gold as well, okay? Certainly room for gold to find a cycle low and start to make it another attack at this all-time high. But I was saying the whole way up, I don't trust this move. It doesn't really make sense. It could certainly run at the same time as risk, but if risk is going to have a blow off top moment, then my question is, why gold now? And I do wonder if what we see is this big rollover, then we get a chance to exit the risk assets into gold. Silver is kind of telling us that story, right? I got long on the breakout. I quickly cut this trade when it reversed. And you can see why, right? You can see why. Fake out. Look, how many percentage points is this for silver? This is roughly nearly 11.5% move-ish, right? In just a few sessions. So this was clearly a fake breakout. The miners as well, you know, I was saying the senior miners got work to do. They still have work to do. The junior miners, again, confirmed a fake breakout now, haven't they? Breakout, no retest resumption, instead still coming down, coming off. Not a good look for gold. And the same is true of the silver junior miners. Look at that hard rejection at resistance. Now, all of these can reverse. All of these can break out. Perhaps that's what happens as we get the lower CPI print, and that confirms that the Fed is done hiking rates. As we reduce the rates, that is usually conducive to a gold and silver bull market, or at least a rally in the short term. So maybe we see these things reverse. But for now, it makes perfect sense to me that whilst we're entering this final blow-off top portion of the rally for risk assets, gold and silver is going to come off. So we are due a cycle low for the S&P 500 around the 22nd of December, maybe the 20th, somewhere in that neighborhood. But for now, this thing seems to want higher. So we are not even late in the cycle yet, particularly. We're only on day 29. We could easily run to day 35 or 36 before we start to entertain a decline into a daily cycle low. At this rate, we are going to run the all-time highs, particularly if that CPI print is cold, and then maybe reject off the all-time high level, pull back into that daily cycle low, and then it's time to move into price discovery at new highs. That seems to be the right trade. That seems to be the right side of the market to be on at the moment. We've done really well at capturing this the whole way through the year, and it's a long and strong continue to push type of situation. The same is true of the NASDAQ, right? We did really well capturing the bulk of this move, really well at ducking out the way during this, and now we're back in, we're long, we're strong, and again, all-time highs are within sight, right? We are a mere few percentage points, something like, what is that, 4.5%-ish away from all-time highs. You know, we can do that in 2 or 3 candles, no problem, particularly if the CPI print is low. Dow Jones as well, look, this is starting to feel a lot like a blow off top, isn't it? Where's the pullbacks? When do we ever see a move this big without a violent pullback? Now, maybe that pullback shows up in the not too distant future, but so far, it looks more like a bull flag that wants to break higher. So it is what it is. This is kind of being confirmed by the VIX as well, isn't it? Look at this. We got that little counter trend wobble. Now it looks like it wants to compress and really get down towards the 10 or even the 8 level whilst the market completes, the stock market completes its blow off top move. We're also seeing breadth continue to widen in the Russell. Okay, look, small cap participation continues to increase. So again, this is a sign that the market is entering a euphoric blow off top moment. Here's oil really quickly. So short and strong continue to push until we break out of this downward sloping red resistance line. Then we'll continue to push this short. Worth noting here, okay, does this look inflationary to you? Or does this look more deflationary? Because to me, this speaks more to deflation than inflation. Now, I would completely abandon this stance if oil was to break out and do something like this. Then we could say, okay, sticky inflation, perhaps that inflation to deflation pendulum has stopped prematurely and is about to swing back the other way. Perhaps we're not going to have this deflationary moment. Perhaps inflation really is going to be sticky. And if that's the case, you'd expect gold and silver to start ripping as well. But as it stands right now, this is undeniably a deflationary look. And remember, this has come at a time when the Middle East is at war and we're supposed to be seeing $100 to $150 barrel of oil. We're not seeing any of that, are we? Okay, this looks way more deflationary than inflationary, and that continues to remain the case unless we start to get a breakout of this downward sloping red resistance line, where of course I will cover my short. The bull of all bulls, Bitcoin. Look at Bitcoin. Again, absolutely relentless, isn't it? Lockout move after lockout move. Yes, we are within days of a day 60 cycle. But if I move on to this fractal chart, notice one, how we're still on pace for this fractal. Okay, we're still more than on pace for this fractal. The number two thing I want to point out is back here, we had from the cycle low, so 60 odd days for Bitcoin, and the entirety of this pullback was only 17%, okay? So for Bitcoin, when it can readily undergo 30 to 40% pullbacks, this little 15 to 17% pullback is nothing for an asset as volatile as Bitcoin. I do wonder if that's what we're gonna get. I wonder if we're just gonna get a tiny little shakeout, something like this, 60-day cycle low, and then resumption of the pain trade, which is higher. I'm not saying it will happen, and I am more than open to seeing a much bigger shakeout, a 30%, maybe even to back test 31, 32. That would be perfectly reasonable to expect, right? But if we don't, the market is going to tell us something and we need to listen. It's also worth noting, if we only get a shallow pullback and then resumption of more up-only trend, then we are going to have just set the second line of attack, right? We've got this red one. If we do something like this yellow squiggle is suggesting, then we are going to be able to set a second angle of attack, right? And then if you've been here before, you know what comes next, right? What comes next is the even steeper one that's near vertical, and then a breakdown from there marks me exiting the Bitcoin market, okay? And this is how you deal with a parabola. I've shown this over and over and over again. I've got a video called How to Sell the Top in Bitcoin. If you want to go and see that, go and see that. For everyone else that's been here before, right? Undeniably, the chart is the chart, okay? So we need to see sideways basing. We need to see pullback. We need to see us build out different structure. Otherwise, if we get a shallow pullback and resumption, then it is on, and it is on for this blow off top move for Bitcoin. Also seeing things like XRP and a bunch of other alts firing off. So can it break out, okay? Can the party get started, or is this thing going to continue to wear down holders? That's to be determined. You know, it's other crypto-related equities as well. Look, where's the pullback? Undeniably coming, right? We've got to get a cycle low sooner rather than later. It's due around the 15th of December. But remember, it could come as early as 6 days before or as late as 6 days after. So have we got a cycle low in place already? Are we about to absolutely melt faces? I would think we probably have to make one more rollover, perhaps into CPI or FOMC, and then out of that we'll find the cycle lows. But you know the deal, right? We'll try to add, move stops up, and capitalize on what is likely going to be the most violent portion of the rally before everything comes tumbling down. MicroStrategy, same deal, right? Look, no pullback, no sign of a 60-day cycle low yet. Riot continuing to blast off. Marathon continuing to blast off, right? This is starting to get very violent and aggressive now. This is starting to get frothy, but that does not mean I want to jump out of this position, because there are potentially way larger numbers on the cards. So still hunting for those cycle lows, but remember, using those cycle lows as opportunities to add positions and move stops up. One thing is for sure, this week is going to be insane. Remember, if we get that lower CPI print, then it's game on for all-time highs. We're going to see a parabola. The crypto and related equities and altcoins and Bitcoin are probably all going to go absolutely ballistic. So what a time to be alive. Members, I'm just about to record your members only video, so look out for that in the next couple of hours. And for everyone else, I hope you have a great weekend. I hope you're doing well in life, and I hope you're ready for next week. For somebody who has been talking about this melt-up chart, somebody that has been proposing this since the lows, right? It's kind of weird. It's kind of weird that we've been talking about this every day practically since all the way back here, and now we're finally a few percentage points away from all-time highs. We're finally one CPI print away from seeing a huge blow-off top moment. And of course, once we get that blow-off top moment, then I'm going to flip bearish. And just like I was bullish down here when everyone was bearish, I'm going to become bearish at the top, and people are going to be like, no, Camel, you're nuts. Why are you bearish now? Why are you bearish at all-time highs? Fed's engineered a soft landing, blah, blah, blah. But this is just how markets work, right? 10% of participants make 90% of the money, and that's because 90% of participants have to lose to that 10%. So stay on the right side. Follow those that have a history of getting things right. I'm your boy Camel. Have a great weekend, and until next time, take care from me. All the best. Cheers. Bye.